Hello, my dear students. Hectic day, but I am here for you to discuss MTP2. See, there are MCQs, case studies that are asked here in MTP2 for which answers are available, but explanation is not given by CA. Many students are asking me explanation instead of telling them over individual charts. Like I just want to make a video so that this gives clarity to every student. So please watch till the end. You are going to get clarity and answer for all the case studies and explanation for all the questions given in MTP2. Okay. First, Miss Chandni, aged 45 years, provides the following data of her gross receipts for the financial year 2023-24 and 24-25. She is engaged in agency business along with providing services as direct card reader. So business receipts were given and gross receipts from profession are also given. Total gross receipts. During financial year 24-25, she paid an amount of 1,20,000 to a contractor for polishing her old furniture. She has taken services from renowned interior designers for her self-occupied residential house property, for which she paid 2,50,000 rupees. Further, on 28th May 2024, she sold one commercial property for 50 lakhs. The value adopted for stamp duty was 52 lakhs. It was purchased for 40 lakhs on 28th April 2017. Cost inflation index for 2024-25 363, 2017-18 272. Brought forward business loss of financial year 2021 is 5 lakhs. During the year, Chandni incurred a loss of 8,30,000 while trading in agricultural commodity derivatives. Based on the above information, choose the most appropriate answer. What is the total amount of tax to be deducted by Miss Chandni? First of all, she paid amount to contractor. Whenever amount is paid to contractor, which section of TDS gets attracted? 194C gets attracted. But when an individual is required to deduct TDS under section 194C, in case of an individual in preceding financial year, if business turnover is more than 1 crore, or in profession, if gross receipts are more than 50 lakhs, then he is required to deduct TDS. So current previous year is 24-25. We need to ignore 24-25. Preceding financial year is 23-24. We need to take 23-24. In 23-24, business turnover is less than 1 crore. In profession, gross receipts are less than 50 lakhs. See, we need to see individually for business and profession. So in preceding financial year, in business turnover is less than 1 crore. In profession, gross receipts are less than 50 lakhs. So he does not get covered under the payer definition under section 194C. If he does not get covered under payer definition under section 194C, then he is not required to deduct TDS under section 194C. Is it clear? So, if he is not required to deduct TDS under section 194C, amount of TDS required to be deducted is nil. What is the amount and nature of capital gain chargeable to tax in the hands of Miss Chandni? When it was sold 28th May 2024, that means before 23rd July 2024. When it is sold before 23rd July 2024, indexation benefit is available. So stamp duty value 52 lakhs. Actual consideration is how much? Actual consideration is 50 lakhs. 110% of actual consideration. How much is 110% of actual consideration? 50 into 110%, 55 lakhs. Stamp duty value is less than 110% of actual consideration. So full value of consideration is 50 lakhs. Full value of consideration is actual consideration, which is equal to 50 lakhs. When it was purchased in 2017 for 40 lakhs. So we can claim indexed cost of acquisition, right? How much is indexed cost of acquisition? Less indexed cost of acquisition. What is the formula? Cost of acquisition into cost inflation index in the year of transfer divided by cost inflation index in the year of purchase. So 40 lakhs into in 24-25 index number is 363. In 2017-18 index number is 272. So 40 lakhs into 363 divided by 272. How much? 53 lakh 38,235.29. So is there gain or loss? There is loss, long term capital loss. How much? 3 lakh 38,235.29. Am I correct? So long term capital loss. This is the answer. Next, what is the amount of loss which can be carried forward to assessment year 26-27 if Miss Chandini filed her return of income on 30th November 2025, assuming there is a business loss of 10 lakhs and income from profession 15 lakhs. See, generally due date for filing ITR is 31st July of assessment year or 31st October of assessment year. Only if ITR is filed within the due date, then only business loss and capital loss can be carried forwarded to subsequent years. Here, when ITR was filed on 30th November 25. That means after due date. When ITR is filed after ITR due date, then whether these losses can be carried forward, business loss cannot be carried forward, in loss from profession cannot be carried forward, capital loss also cannot be carried forward. Reason is ITR is filed after the due date. So no loss can be carried forward. Amount of loss carried forward to subsequent years is 0, nil. Okay. Next. Regarding second one, Mr. Harsh, age 45 years, is appointed as Senior Executive Officer in Ambition India Limited, Mumbai on 1st February 2024 in the scale of 35,000-3,500-65,000. He is paid dearness allowance 40% of salary forming part of retirement benefits. So when he was appointed on 1st February 2024. What is previous year? Previous year is 1st April 24 to 31st March 2025. Am I correct? So up to 31st January, his salary for this period, his salary is 35,000. From here onwards, his salary is 35,000 plus 3,500, 38,500. Okay, that means what? For 10 months, his salary is 35,000. For 2 months, his salary is 3,500. So how much is his salary? Basic salary is equal to 35,000 into 10 months plus 3,000. 35,000 plus 3,500. 38,500 into 2 months. How much is his basic salary? 35,000 into 10 plus 38,500 into 2. 4,27,000. How much is his DA? DA is 40% and is forming part of retirement benefits. 4,27,000 into 40%. How much? 1,70,800. So basic plus DA forming part of retirement benefits is equal to 4,27,000 plus 1,70,800, 5,97,800. Now, he is given rent-free unfurnished accommodation on 1st May 2024, which he occupied only from 1st October 2024. The company pays lease rent of 5,000 per month. Whether employer own accommodation is given or employer rented accommodation is given, employer rented accommodation is given and employer is paying rent of 5,000 per month. Am I correct or not? Yes. Careful. Here rent-free accommodation is occupied from 1st October. That means rent-free accommodation is occupied only for 6 months. For 6 months only, we need to calculate taxable value of rent-free accommodation. Shall we calculate? Because in one of the MCQs, he asked us to calculate value of rent-free accommodation. Careful. He occupied rent-free accommodation from 1st October 24 to 31st March 2025. From 1st February 2025, salary is getting changed. That means for 4 months, his salary is 35,000. For 2 months, his salary is 38,500. So how much is basic salary? Basic salary for 6 months only, because rent-free accommodation is occupied only for 6 months. We need to calculate the benefit also for 6 months. 35,000 into 4 plus 38,500 into 2 months. How much it will be? 35,000 into 4, 38,500 into 2. 2,17,000. Plus DA forms part of retirement benefits. How much? 2,17,000 into 40%. How much it will be? 86,800. 3,03,800. Now, how much is taxable value? Taxable value of unfurnished accommodation is equal to actual rent paid by employer or 10% of salary, whichever is lower. Am I correct? The actual rent paid is 5,000 is rent per month, right? 5,000 into 6, 30,000, or 10% of salary, 3,03,800 into 10%. 30,380, whichever is lower means 30,000 is taxable value of unfurnished accommodation. Is it clear? Next, he has been provided a car of 2,000 cubic capacity. 2,000 cubic capacity means it is big car. It is not small car, which is used by him for private purpose. That means what? It is entirely used for personal purposes. The actual cost of car is 8 lakhs. Monthly expenditure of car is 5,000, which is fully met by employer. Whether car benefit is asked? Yeah, perquisite value of car was asked. So, see, car provided by employer, expenses met by employer, car is used completely for personal purposes. So, taxable value is equal to 10% of cost of car plus actual expenses. How much is 10% of cost of car? 8 lakhs into 10%, 80,000 plus 5,000 per month. That means per annum 5,000 into 12, 60,000. Taxable value of car is equal to 1,40,000. Is it clear? This is the answer. Harsh would be eligible for deduction in respect of health insurance premium paid during 24-25. His age is 45 years, right? See, he pays lump sum premium of 1,50,000 towards health insurance for self and his wife for 48 months starting from 1st October 24 by account payee check. He also contributes 1,50,000 towards public provident fund. Which deduction was asked? Deduction was asked with regard to health insurance premium. 1st October 24. 48 months means 30th September 25, 30th September 26. How many previous years are there? Previous year 24-25, previous year 25-26, 30th September 26 means previous year 26-27. That means health insurance premium 1,50,000 divided by 3. Every year 50,000 is apportioned. He is not senior citizen. He is normal citizen only. So even though 50,000 is available, out of 50,000, maximum deduction allowed is equal to 25,000. Am I correct? So 25,000 is allowed. But let us check the answer. Second one, second point, C is the answer. Let us see. Yes, C is the answer. Next, Ridhima, aged 32 years, an interior decorator, has professional receipts of 25,60,000 for previous year 24-25. She also earned 1,25,000 as dividend and 4,65,000 as interest on FD. She incurred expenses of 30 lakhs for her profession and 30,000 as interest on loan for making investment in shares on which she received dividend. What would be her total income for assessment year 25-26, assuming she wishes to make maximum tax savings without getting her books of accounts audited? If she does not want to get her books of accounts audited, then she is required to disclose her income under section 44 ADA. Under 44 ADA, presumptive income is equal to 50% of gross receipts. How much are her gross receipts? Her gross receipts are 25,60,000. 25,60,000 into 50% means how much? 12,80,000. So her professional income is 12,80,000. And dividend income is 1,25,000. So dividend income 1,25,000. But to earn 1,25,000, how much expense she incurred? She incurred 30,000 as interest on loan. In income from other sources, I have discussed one point. Whenever loan is taken to earn dividend income, interest paid on loan or 20% of dividend income, whichever is lower will be allowed as deduction. So how much is interest expenditure? 30,000. Interest expenditure is 30,000. 20% of dividend is 1,25,000 into 20%. How much? 25,000. Out of these two, whichever is lower means 25,000 is allowed as deduction and balance 1 lakh is taxable. Next, she earned 4,65,000 interest on FD. So how much is her total income? 12,80,000 plus 1 lakh plus 4,65,000, 18,45,000. Whether that amount is there? Yes, 18,45,000. Let us check the answer. 3A. Next, Arun's gross total income for previous year 24-25 is 2,45,000. He deposits 45,000 in public provident fund. He pays electricity bill aggregating to 1,20,000 in 24-25. See, electricity bill, if it is more than 1 lakh, income tax return is required to be filed. So Arun is required to file return of income since his electricity bills exceed 1 lakh for previous year 24-25. Is it clear? Yes. Let us start with first question. Before we start with question, let us see who SSE is. SSE is individual and he is paying taxes. He shifts out of default tax regime. That means what? He is paying taxes under optional tax rates. Okay, I'm going to explain you the question. You please go through the answer. Once I finish explaining the question, answer is available for MTP2 in the ICA website. Vivek is an advocate and furnishes you the receipts and payments account. So what is given? P&L account is not given. What is given is receipts and payments account. It's like cash book or bank account. For the financial year 24-25, opening balance, fees from legal services. This is taxable under PGBP. Motor car loan from HDFC at the rate of 12% per annum. This is loan. This is not an income. That is not an income. She receipts, sale receipts of 5,275 listed equity shares sold on 31st March 25. So this income is taxable under capital gains. Are there any receipts? No. Expenses. Staff salary and bonus to clerks. This is allowable expenditure. Other general and administrative expenses, that is also allowable. Office rent 1,80,000, that is also 1,48,000, that is also allowable. Life insurance premium 49,000. When life insurance policy was taken, see, generally under ATC, actual life insurance premium or 10% of sum assured is allowable. When if LIC policy is taken after 1st April 2013. So 10% of sum assured means 50,000. Actual life insurance premium 49,000, whichever is lower means 49,000 is allowed as deduction under section 80C. Motor car acquired in January. January means what? Put to use less than 180 days. So you need to calculate half rate of depreciation. Books bought by way of account payee check in the month of May, June and September. So on books rate of depreciation applicable is 40%. On motor car rate of depreciation applicable is 15%. Am I correct? Next, computer acquired on, see, May, June, September means put to use greater than 180 days. You can calculate full rate of depreciation. Computer acquired on 1st November 24. That means put to use is less than 180 days. You need to calculate half rate of depreciation. Generally for computer also 40% is applicable. 40% into 1/2. 20% depreciation is applicable. Domestic drawings not allowed as deduction. Motor car maintenance allowed as deduction. Public provident fund allowed as deduction under ATC. Closing balance. Listed equity shares on which STT was paid. In case of listed equity shares, if STT is paid, section 112A or 111A will get attracted. Am I correct? Acquired in August 2016 for 1,21,800. That means these were acquired before 1st February 2018. Fair market value as on 31st January 2018 was 80 per share. So on this, special cost of acquisition is available. How much is full value of consideration? Full value of consideration is they are sold for 5,95,000. Full value of consideration 5,95,000. These are grandfathering investments. So special cost of acquisition is available. Step 1, full value of consideration or fair market value as on 31st January 2018, whichever is lower. Full value of consideration is 5,95,000. Fair market value is 80 per share. So 5,275 into 80 per share, 4,22,000. Out of these two, whichever is lower means 4,22,000. Step 2, step 1 or actual cost, whichever is higher. Step 1 4,22,000. How much is actual cost? Actual cost is 1,21,800. So out of these two, whichever is higher means 4,22,000. So how much is capital gain? Capital gain is 1,73,000. This is long-term capital gain taxable under section 112A. I hope my answer is correct. Let us check once. Capital gain, capital gain. Where is capital gain? Yeah. Answer is, you can see, 1,73,000. Next, motor car was put to use both official and personal purpose. 1/3 of the car is for personal purpose. That means what? Motor car, 1/3 personal. That means balance 2/3 is for business purpose. Am I correct or not? That means business purpose expenditure is allowed. So motor car maintenance 72,000. 72,000 into 2 by 3. How much it will be? 48,000 is allowed as deduction. Next, how much is interest on motor car? Sorry, depreciation. 9,50,000 into 15% into 1 by 2. How much? 71,250. Out of 71,250, only 2/3 is allowed. That means how much? 47,500 is allowed as deduction. Is it clear? Mr. Vivek purchased a flat in Jhansi for 35 lakhs in July 2016, cost of which was partly financed by loan from Punjab National Housing Finance Limited of 25 lakhs, his own savings 1 lakh, and a deposit from Repco Bank for 9 lakhs. The flat was given to Repco Bank on a lease for 10 years at the rate of 35,000 per month. Further, Mr. Vivek has paid following expenses in respect to the flat during 24-25. Municipal taxes paid, allowed as deduction. House insurance premium, not allowed, because in case of house property, actual expenses are not allowed. In place of actual expenses, standard deduction is allowed at the rate of 30% of net annual value. Am I correct? Good. As per interest certificate issued by PNB, he paid 1,80,000 towards principal and 2,01,500 as interest. Okay. So, shall we calculate income from let out property quickly? Income from let out property. How much is gross annual value? If fair rent, municipal rent, standard rent is not given, actual rent will be taken as gross annual value. 35,000 into 12. How much? 4,20,000. From gross annual value, you can claim municipal taxes as deduction. How much are municipal taxes? 8,200. How much is net annual value? Net annual value is 4,11,800. From this, we will reduce deductions under section 24. First one is standard deduction. It is allowed at the rate of 30% of net annual value. 123,540. Section B, interest on borrowed capital. How much is interest on borrowed capital? Capital borrowed is 25 lakh rupees. On 25 lakh rupees, rate of interest. What is rate of interest? Sorry, rate of interest was not given, but interest amount was given. So 2,01,500 interest amount we can claim as deduction. So 4,11,800 minus 123,540 minus 2,01,500, 86,760. Let us see whether my answer is correct or not. Income from house property. Yes, my answer is correct. 86,760. Next, he earned 1,20,000 in speculation business and 1,80,000 in commodity speculation business. See, speculation business loss can be set off against speculation business profit. So speculation business profit is 1,20,000. Speculation business loss is 1,80,000. So balance speculative business loss is 60,000 rupees that cannot be set off against any other income that will be directly carry forwarded to subsequent years. Next, Mr. Vivek received gift of 21,000 each from 4 of his family friends. 21,000 into 4, I think 84,000. Am I correct? 21,000 into 4. Yeah, 84,000 greater than 50,000. So it is fully taxable. He contributed 1,21,000 to PM Cares Fund. It will fall under category 1. 100% deduction is allowed. He donated to registered political party by way of check. So this is allowed as deduction under 80GGC. He follows cash system of accounting. So major adjustments, I think all the adjustments I have explained to you. So you can go ahead and you can calculate total income and tax liability and verify with the answer. One small thing, motor car, how much is car loan? 5 lakhs, rate of interest 12%. So interest on motor car loan, how much? 5 lakh into 12%, how much it will be? 60,000. 60,000 into only 2/3 is business purpose. 40,000 is allowed as deduction. Is it clear? Next, second question. On 22nd September 24, Prabjot, aged 55 years, an Indian citizen, left India for the first time to work as CFO of a company in Australia. Why is he leaving India? He is leaving India for employment outside India. In case of an Indian citizen who is leaving India for the purpose of employment outside India, only B1 is applicable. Am I correct? B2 is not applicable. So what will we do? We will check B1. If B1 is satisfied, resident in India. B1 not satisfied, he becomes non-resident. Is it clear? So when he went on 22nd September. That means how many days he stayed in India? April 30, May 31, June 30, July 31, August 31, September 22 days. He stayed in India for 175 days, less than 182 days. B1 not satisfied. B2 don't check because B2 is not applicable. As B1 is not satisfied, he becomes non-resident in India. When he becomes non-resident in India, for him only Indian income is taxable. Salary computed from company in Australia, received in bank account in Australia. This is foreign income, not taxable. Dividend from South African company received in South Africa. This is also foreign income, not taxable. Interest received from South Indian Bank, 21,000. This is Indian income, taxable. If he is paying taxes under optional tax rates, 10,000 deduction is available under section 80 TTA. Okay. If he is paying under default, that 10,000 deduction is not available. Loss from business in South Africa. This is foreign loss. Foreign loss is not allowed to be set off. Agricultural income from a land situated in Gujarat. Agricultural income is fully exempt. So taxable amount is 21,000 and SSE is paying taxes under optional tax rate. So 10,000 deduction is allowed. So 11,000 is taxable. Is it clear? Next. Examine and explain TDS implications in the following cases along with the reasons thereof, assuming that the deductees are residents in India and having a PAN which they have duly furnished to the respective deductors. Rohit and Raj are joint owners of a house property. They sold the house property on 31st December 24 for 60 lakhs, receiving 30 lakhs each as their respective shares. I told you in this section 194 IA gets attracted. as per section 194 IA, if value of property sold, stamp duty value or actual consideration, whichever is higher we need to take. If value of house property is more than 50 lakhs, okay, immovable property. If stamp duty value or actual consideration, whichever is higher, we will take. If it is greater than 50 lakhs, then TDS is required to be deducted. Here, we need to take for all the owners together. So here, both the owners together, value is 60 lakhs, which is greater than 50 lakhs. So TDS is required to be deducted under section 194 IA at the rate of 1%. I told you earlier there was loophole. If value of property is more than 50 lakhs, they use it to divide among co-owners. Individually, it is less than 50 lakhs. They use it to not deduct TDS. Later on, from 1st October 24 onwards, government like income tax department CBDT came up with a rule that we should check aggregatedly. So all owners together, if stamp duty value or actual consideration, whichever is higher, if that amount is greater than 50 lakhs, TDS is required to be deducted under section 194 IA at the rate of 1%. All owners for sale consideration, all buyers for payment of amount. So owners together, buyers together, we need to check the aggregate value. If aggregate value is more than 50 lakhs, TDS is required to be deducted. XYZ Limited provided luxury car worth 15 lakhs to its distributor Mr. A as incentive for achieving high sales targets. That means distributor is doing business. As part of business, if any benefit is received, 15 lakhs is benefit. So benefit or perquisite, if any perquisite is received as part of business, okay, on such benefit, value of benefit is 15 lakhs, which is greater than 20,000. So TDS is required to be deducted under section 194 or at the rate of 10%. Here benefit is not given in cash, benefit is given in the form of kind. So XYZ Limited, before they give the car worth 15 lakh rupees, XYZ Limited should ask Mr. A to deposit 10% of 15 lakhs, 1,50,000 to government and produce the challan to XYZ Limited. Then only XYZ Limited should release the vehicle to distributor Mr. A. So XYZ Limited should ensure tax on car worth 15 lakhs is paid to the government before they release the vehicle. Is it clear? Next. Question number 3. Mr. Amit, the proprietor of Amit Enterprises, owns 2 business units. On 1st April 24, he transferred Bhavana unit. So what is being transferred? Bhavana unit. And it is transferred as a whole. Unit as a whole is transferred. How? By way of slump sale for a total consideration of 75 lakhs. Fair market value of capital assets transferred is 90 lakhs. That means full value of consideration is equal to lump sum consideration or fair market value of capital assets transferred, whichever is higher. Lump sum consideration is 75 lakhs. Fair market value of capital assets transferred 90 lakhs, whichever is higher means 90 lakhs we will consider. Is it clear? Are you able to understand? Good. Bhavana unit was established in financial year 2005-06. The expenses incurred for transfer amounted to 28,000. His balance sheet as on 31st March 24 is as under. So, in case of slump sale, we need to calculate net worth. Net worth is allowed as cost of acquisition. And this was started in 2005-06, transferred on 1st April 24. Period of holding of business is greater than 36 months. So it will be classified as long-term capital asset. So we need to calculate net worth. Own capital, revaluation reserve for land of Bhavana. Revaluation figures should not be considered. I told you, when you are calculating net worth, you should not consider revaluation amount. So land value is 36 lakhs. from 36 lakhs, revaluation reserve is 9 lakhs. So land value is 27 lakhs. You need to consider 27 lakhs. Okay. So shall we calculate net worth? Calculation of net worth. Net worth is equal to total value of total assets minus total liabilities. Land value is 27 lakhs. Next one, building 9 lakhs. Machinery 3 lakhs. Other assets 4 lakh 50,000. So building 9 lakhs. Machinery 3 lakhs. Other assets 4 lakh 50,000. So total value of total assets, how much? 27 plus 9 plus 3 plus 4.5, 43.5 lakhs. From this we need to reduce total value of liabilities. How much are liabilities? Bank loan 70% for Bhavana unit. So bank loan 6 lakhs into 70%. How much? 4 lakh 20,000. 4.2 lakhs. Trade creditors 25% for Mayapuri unit. 25% Mayapuri unit means 75% for Bhavana unit. 4 lakh 50,000 into 75%. How much? 3 lakh 37,500. How much is balance? 43 lakh 50,000 minus 4 lakh 20,000 minus 3 lakh 37,500. 35 lakh 92,500. So net worth is equal to 35 lakh 92,500. Full value of consideration how much? Full value of consideration 90 lakhs. Transfer expenses 28,000. Net consideration 90 lakhs minus 28,000, 89 lakhs 72,000. From this we will reduce cost of acquisition, which is nothing but net worth 35,92,500. So how much is long-term capital gain? 53,79,500. So long-term capital gain is 53,79,500. Am I correct? Let us see. Yeah, 53,79,500. Correct. Next question B. Mrs. Anjali, US citizen, is a resident and ordinary resident. See, in case of ROR, global income is taxable. Both Indian income and foreign income. She owns a house property in Chicago, USA, which she uses as her residence. See, every individual can disclose 2 house properties as self-occupied properties. Am I correct? Yes. So let us see how many properties that Anjali is having. If Anjali is having more than 2 self-occupied properties, 2 will be treated as self-occupied property. Third one, even though self-occupied, it will be treated as DLOP, deemed to be let out property. The annual value of this house property is $20,000 with the exchange rate assumed at 75 per US dollar. In addition, so this is first house property. She took ownership and possession of flat in Surat on 1st July 2024. So this is second house property. So up to 2 house properties can be self-occupied. If there is a third house property which is also self-occupied, then out of 3, only 2 will be treated as self-occupied. 1 we should treat it as deemed to be let out property. Am I correct? Good. Which she used for self-occupation during her stay in India. The flat was occupied by her for 7 months in a financial year. The municipal valuation of the property 3,84,000, fair rent 4,20,000. She paid property tax 16,200, sewerage tax 1,800. See, if these are treated as self-occupied property, gross annual value is nil. We don't want fair rent, municipal rent and standard rent, because in case of self-occupied property, gross annual value is nil. So seems she is having only two house properties. So only two house properties, both will be treated as self-occupied properties. For purchase of Surat flat, she had taken loan from Standard Chartered Bank in June 2022. Interest on loan amounts to 49,200 for the period before 1st April 2014. See, loan taken on when loan was taken June 2022. When flat was purchased, flat purchased on 1st July 2024. Flat bought 1st July 2024. That means flat was bought in 24-25. Before 24-25, whatever the interest is there, that is pre-construction period interest. For 24-25, whatever the total interest is there, total interest will be considered as current year interest. Am I correct or not? Yes. So how much is interest? Before 1st April 24, interest is 49,200. Pre-construction period interest 49,200. 1st April to 30th June. 1st April to 30th June 50,800 and 1,31,300 from 1st July. So 1st July is there. For this period interest is 50,800. For balance period 1,31,300. Both the interest will be treated as current year interest. Is it clear? Because you should not bifurcate the year in which house property is purchased. That year's total interest will be treated as current year interest. The current year interest is equal to 50,800 plus 131,300. Total 1,82,100. 1/5 of pre-construction period interest. How much? 49,200 divided by 5. 9,840. Total 182,100 plus 1,91,940. So this is interest. It is less than 2 lakhs. So total interest is allowed as deduction. Additionally, she owned a house property in Ranchi which she sold in 2023. See, she is having third house, but it was sold in 2023. That means in 24-25, she is only having two house properties. One house property was sold in March 2023. That means in 22-23, she sold the house. In 24-25, she is having only two houses. Both the houses are treated as self-occupied properties. In respect of this property, she received arrears of rent amounting to 60,000 in March 25, which had not been previously taxed. So arrears of rent, how much? 60,000. Out of 60,000, 30% deduction is allowed, right? 18,000 deduction is allowed. Balance 42,000. So how much is net taxable? Sorry, net loss. Net loss is 1,49,940. Is it clear? Am I correct? Let us check once. 1,49,940. Is it clear? Next, fourth question. Mr. Mayank, aged 65 years, resides in Hyderabad, provides the following information relating to financial year ended 31st March 25. First of all, let us see under which tax rates he is paying tax. You are required to compute total income under normal provisions. Normal provisions means tax rates applicable are optional tax rates. Okay. Pension 6,60,000. From pension, standard deduction is allowed 50,000 because pension is taxable under salaries. So net income taxable is 6,10,000. Interest from bank fixed deposit gross. What is his age? His age is 65 years. Out of 55,000, 50,000 deduction is allowed under section 80 TTB. Correct. So this is taxable under other sources. Income from speculation business 40,000. This is taxable under PGBP. Long-term capital gains 2,50,000. Long-term capital loss. See, long-term capital loss can be set off against long-term capital gain. So net long-term capital gain is 250 minus 110. 140. 1,40,000. Loss from card games. This is dead loss. That loss cannot be set off against any income. Income from betting. This is taxable under other sources. Life insurance premium paid by Jack 22,500 for insurance of his life. Insurance policy taken 8th September 2015. That means after 1st April 2013. So how much deduction is allowed? Actual life insurance premium or 10% of sum assured, whichever is lower. Actual life insurance premium 22,500, 10% of sum assured 20,000, 2 lakh into 10%, whichever is lower means 20,000 is allowed as deduction. Premium of 26,000 paid by check. See, he is a senior citizen, right? So total 26,000 is allowed as deduction. 15,000 donated in cash. If amount is donated in cash under section 80Z, not allowed. Up to 2,000 donation can be given in cash. Beyond 2,000, if donation is given in cash, total donation is not allowed as deduction. These two are theory questions you can study. So if you understand all MTP answers, please share with your friends also, so that these MTP answers will be useful. Only if you are happy with this explanation, then only share. Okay. Thank you very much. Bye. I wish you all the very best. Exams are very near. Keep your best efforts. Qualify. I wish you should qualify in this upcoming attempt. And I wish you to be very happy. Thank you.